Welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Michael Casey, filling in this week for Christine Lee. Joining me are my co-hosts, Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Emily Parker, Managing Director of International Content. Good morning to you both. So, Lawrence, I mean, one of the things that just hit me as a fairly big story is just the very fact that Apple now is worth $3 trillion in terms of market cap. It kind of puts a lot into perspective, I think.
Yeah, you look at crypto. Crypto is now like $2.2 trillion in market cap, so it's 2/3 the value of just one company. And so for a lot of people, and of that $2 trillion, by the way, only 882 billion is Bitcoin. So when you look at it that way, there are two interpretations you can have. One is that, crypto isn't that big; it's still smaller than one company. Or alternatively, is that it's sort of the beginning. We're still sort of in the beginning. If you believe this is the big financial revolution, the next big change in finance in the past 500 years, as somebody who's on this panel will say. Then you're kind of early on, right? You're sort of you've got a long way up to go if that's the thesis. So, those who believe that's the case and saying that, it's too late, I missed Bitcoin when it was at 300 and it's only, less than 50,000, you have a different viewpoint there.
And Emily, a lot still going on in this little world of crypto and various parts of it, right?
Absolutely. I think one of the big trends of 2022 is going to be how governments use digital currency and blockchain technology. So one of the big things that we're seeing right now is the rise of central bank digital currencies, or CBDCs, around the world. The latest is from Mexico. The Central Bank of Mexico has announced that they plan to launch a CBDC by 2024, which means they may be faster than the United States. Jamaica also moving forward with a pilot. So I think this is a real story to watch this year.
Who'd have thunk it, right? Governments are the things to watch. Okay, so let's take a look at Bitcoin. We are going to look now at the CoinDesk Bitcoin Price Index, the XBX, and it is currently not looking all that great, 46,955. That's down a little bit on the day. And the CoinDesk Ether Price Index, ETX, is at 3,873. That's up 1.4% on the day. And of course, the DFX, the CoinDesk DeFi Index, is, it's down a bit from what's been a fairly strong run of late, 524.41. Okay, so joining us now is Marieke Flament. She's the newly appointed CEO of the NEAR Foundation. Welcome, Marieke.
Hello, hi.
Hi.
Thanks for having me here.
So one of the things that sort of became a talking point, you guys, the NEAR Foundation, of course, focused very much on Web3 and that future. Going into the new year was this very vocal battle between Jack Dorsey, the former CEO of Twitter, and people like Chris Dixon in the VC space, saying that Web3 is all about, just a buzzword to try to develop money for VCs and the like. What does Web3 actually mean to you guys?
Yeah, to us, Web3 actually means adoptions, right? It means what does it mean for content creators? It means what those people are going to be able to actually do and to monetize differently what they have and what they own. And I think if you think in today's world, if you're a content creator, if you actually have some image or video or anything that you do, the reality is that you can start monetizing that on a platform, but you don't really own your content. And especially as, let's say, an artist, the royalties that might be made going on after and after, you actually don't have that. So I think, we really believe that Web3 can be something that really decentralized, that reshares powers of data, of ownership, and what actually ultimately individual users can end up doing.
So if my understanding is correct, I believe that NEAR is also positioning itself as a kind of rival or competitor to Ethereum, right? In terms of transaction time. And can you tell us a little bit about that? Is that a correct assessment that NEAR is also trying to offer kind of better service, so to speak, than Ethereum, and how it plans to do that?
Yeah, so we don't really see ourselves as competitors, right? We actually see that it's a world where different chains will have to collaborate and be together. So we definitely don't put ourselves as competitors. What we are trying to do with Neo Protocol is a permissionless proof of stake network that is actually extremely fast, that is simple to use for developers, for end users. So we're aiming a lot on simplicity to make sure that we can have a solution that enables really Main Street adoption. But again, in our world, we're more looking at interoperability and how can a world with different chains collaborate, because the reality is that you probably don't need to have only one, but you'll need to have several chains who can do different things and who actually need ultimately to collaborate.
So, Marieke, Happy New Year, first of all, and second, you are supporting now UST, right? The Terra, and not USDC, where you once worked at Circle. So, are you at any point going to have near support USDC, or is there have you done any outreach to them to get them on your network?
Well, look, we do have a lot of places where we need to be integrated with partners, and I would say UST is the first one. We definitely are looking to work with others. USDC is obviously a place where I worked at Circle, and we have strong ties, and we're looking to actually continuously strengthen those ties. But again, it's a matter of prioritizing and all the different building blocks that we need to build. So I would say stay tuned.
So Marieke, congratulations on the appointment, by the way. But just picking up on Lawrence's point there, I mean, you've got an interesting CV. I was taking a look at it, and before you were at Circle, you had a background in banking. You've also worked, interestingly, with consumer brands, some luxury brands in particular, and that part jumped out at me. I'm just wondering, as you envisage this Web3 world, what role do you see for brands in that? What are the opportunities and challenges for brands in a Web3 world?
Yeah, well, I think let's start with maybe opportunities, right? If we look at an opportunity for creators, and again, brands and ownership of brand and the asset you create, and if you're today a retailer with a big name, how do you actually translate that in the digital world? I think it's still very difficult to do, and I think that's an opportunity that Web3 is going to build. I think when we look at challenges for any large company or large institution, as we all know, the world of crypto and the world of blockchain goes really, really fast. And I think the challenge there is actually how do you keep up and how do you figure out what are the use cases that are going to be used? What I think is really important is ultimately, the words Web3, blockchain, crypto, all that, to end users and consumers and to what it does to our life doesn't really matter. It's really all going to be about what does it do? What are the use cases that can come there? So I think when I think of brand and retailer in particular, I think about that, the opportunities of creating new worlds and creating actually new products in a different way.
So if you had to define it, what does Web3 mean to you? How are you telling people, given your background in let's say LVMH and what have you, when you go back to your former coworkers and you explain to them what Web3 means, how are you describing it?
I'm describing it as an end user now, you can finally own what you create. You can live differently. You can own your governance. You can own your data. So it's basically making sure that as an end user, you can put that back into your hands rather than having to go actually to centralized institutions or companies where you actually honestly don't really know what's happening to the content you create or to your own data.
That's a nice, concise definition of Web3. Going back to this question about multi-chain, we're hearing a lot about this, right? We're moving into a multi-chain world. This is the future. What, in your view, are some of the main challenges or obstacles that are still in the way from us reaching this multi-chain world? What is keeping us from getting there?
I think what's keeping us probably from getting there is just the amount of things that we have to do, right? So when you think of chain, there are actually, lots of different things, lots of different projects. So what do you prioritize? How do you actually do that? And how do you make that in a way that is seamless, that doesn't use that many resources, and how can we actually integrate that? I think some of the big movements that we can start seeing are going to help to actually have the building blocks and the foundations. But ultimately, in a space that is booming as much as what we see in crypto, the problem comes to prioritization and making sure that as we come to saying who works with who and how do we work together, we have actually the time to do that.
Marieke, as I understand it, you're in the business, of course, of distributing grants to entities to build out this Web3 future. Can you talk a little bit about the criteria that you apply to that? Is it purely for building on the Near protocol, or are there opportunities for folks who are building in this multi-chain environment?
Yeah, well, look, so definitely our goal and our aim, in particular as a foundation, is to raise awareness and to increase usage and build on Near. So definitely wanting to build on Near or wanting to build to help the Near ecosystem is fundamental in the distribution of grants. And that's one of the things that we look at is how is this going to help the ecosystem and how does it help actually move forward this mainstream adoption of what we believe is for Web3. So that's definitely one of the first criteria. But if it's to help build something that builds interoperability for Near and others, definitely come to us. Thank you for raising that. There's a lot of grants, so definitely check the website near.org because there's a lot there that we can offer.
And they don't have to necessarily develop particularly for Near, right? Is that my understanding? Is that they can do other things, or is it primarily for Near? I mean, what do you expect the developers to do really with the money, other than build cool things? I mean, is there anything specifically, any sort of criteria that you have for giving that money?
So we do look at building on Near, so leveraging actually the Near technology to build something. We're very open-minded in terms of use cases when it comes to. We look at milestones. So we look at, okay, what are the things that you're trying to achieve? What support do you need from us? How can we actually help? Within the network and the reach and the expertise that we have, how can I actually help you do that? But primarily, actually, it's building on Near to help the Near ecosystem.
One of the other themes that we've seen recently is the increasing globalization of crypto. Do you have a sense of Near where your users are located geographically, or where some of the geographic priorities will be for the coming year?
Yeah, great question. So we do definitely see that our users are like across the world, right? So it's definitely not a game of having users who are only, let's say, from the US or only from Asia. It's very, very much across the globe. And I think that's the power indeed of what ecosystem like Near and others can also develop. But the idea there is that it's at the same time, it's very global, but at the same time, it also becomes very local, because we're back in a world where if you have a local network, let's say, for example, in Ukraine, where some of our founders are from, if you have a local network in Ukraine, that can be extremely powerful from a language perspective, from also starting to have actually this network effect of people together and collectively. But broadly speaking, we're extremely global, and I think that's only going to continue going that way.
Marieke, the Near token, I think, had a pretty good year last year. As far as I understand, it was 800% gains, if that's correct. That obviously boosts your treasury, but, we live in volatile times. Can you talk a little bit about how you manage those funds and how you think about when and how they should be dispersed?
Yeah, so as a foundation, I would say, our primary focus is really much more on usage and bringing billions of users who can actually ultimately beneficiate of the Near protocol and what it does. So I will be very open. We are not focusing on the price, and the price, what does the price do is not in itself a goal that we do have. What it means indeed is more that therefore the treasury and the capital that we have that we can look at and how we can actually make sure that we develop that is really important, and therefore ensuring continuous development and deployment of that capital in a fair way is really important.
Okay, well, thank you very much for that, Marieke. That was Marieke Flament of the Near Foundation.
Thank you.
Markets analysis with Standpoint Research.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Checking in on Bitcoin again. the CoinDesk indices Bitcoin price XBX is currently at 46,900. That's down a little on the day. The CoinDesk Ether price index at 3,860, and the DeFi index DFX is currently at 524.25. Okay, so we are now going to chat with Ronnie Moas, the founder and director of research at Standpoint Research. He joins us now to discuss markets. Hi there, Ronnie. How are you?
I am fine. Thank you for having me.
Okay, so we're looking at a bit of a mixed picture now at the beginnings of the year. We've sort of seen a continued sell-off for Bitcoin and Ether, but some of the other altcoins are up. What's your explanation for the kind of volatility of the moment?
Well, volatility is something that people have gotten used to with Bitcoin. And my answer to people who have a problem with the volatility is that Bitcoin has gone from $500 to $50,000 in the last 5 years. So if that's the price of admission, I'm willing to deal with that kind of volatility. One thing that people really need to take out of this interview is that we are a few years away from getting to the point where there is $1 quadrillion tied up in the various asset classes. That's 1,000 times a trillion. If you believe that Bitcoin catches 1% of what is in stocks, cash, bonds, gold, art, collectibles, and real estate, 1% of $1 quadrillion puts Bitcoin at $10 trillion, I'm sorry. And that would put the price at $500,000. And that is if we catch 1% over the next few years. So if you miss the move from 500 to 50,000, there's nothing you can do about that. You haven't missed the move from 50,000 to 500,000, which I think we will see over the next 3 to 5 years.
Happy New Year. So as we're entering a new year, I'd love to hear a little bit about what's on your radar for this coming year. Maybe, for example, outside of Bitcoin, are there any coins that you're looking at specifically that you are expecting particular strong performance for, or any other trends like NFT, DeFi? What's on your radar for the coming year?
I really have a laser focus on Bitcoin. My view on altcoins is that you are going to get burned more than likely if you try to find a flower in all of the weeds that are out there. I don't know anyone that is going to beat Bitcoin over the long run with a diversified portfolio. That would be like trying to beat the S&P 500 after hedge fund management fees and performance bonuses. It's just not going to happen. If you're not happy making 10x on Bitcoin over the next few years, there's probably something wrong with you. Look at the list of the names in the top 20. Every year it turns over 30, 40, 50, 60, 70. I know how to value Bitcoin. I have no idea how to value these other names. If I was going to be pressured into making a recommendation, I would probably say that Binance, which is a name I recommended years ago, is probably overvalued relative to FTX or Crypto.com, for example. I prefer, if I'm going to go into the top 50 on CoinMarketCap, my bias would be towards something like that.
Well, Ronnie, I guess it's safe to say you're a maximalist here, but in the meantime, in the very short term, we've seen access to crypto kind of weakening, or it's harder to access crypto from places like China right now, especially after the crackdown over the past few months. Do you think that that's what led to the overall price weakness in Bitcoin? Do you think, at least for the near term, that we've seen this sort of lack of ability from Asia to invest in it the way it used to several months ago?
Well, I had one of the most conservative price targets for 2021. My year-end target for last year was $84,000. So I'm a little bit surprised and disappointed that we haven't hit that mark yet. There have been a bunch of headlines coming out. I just see it as the same old, same old, same old. For 12 years, we've been dealing with this. and it's just noise that you have to disregard. Bitcoin is not dependent on Elon Musk. It's not dependent on China. It's not dependent on India. Most of the supply has been sucked out of the market already, and we are only a few headlines away from Bitcoin going from where we are today to $70,000 or $80,000. I really am not worried about China. I'm not worried about GOC settlement or anything. There is such a small available supply right now that there are hundreds of millions of people around the world that would be more than happy to suck up whatever comes out of those markets.
So it's safe to say that you don't think that profit taking that allegedly happened in Q4 actually happened. In other words, that was sort of a narrative that was spreading around the market that, the reason why Bitcoin is weakening over the past couple of months was because funds were taking profits. You think that idea or narrative or myth should be dispelled, correct?
Well, there's a lot of noise going on. You can have 100 sellers coming into the market today, but if there's one buyer that wants to accumulate, huge buyer can overwhelm 100 sellers. And the flip side is also true. You could have 100 buyers coming in, but if there's one seller looking to exit a large position, that's a problem. There was tax loss selling at the end of the year by people that were in the red, and there was profit taking by people that when it was below 30,000. So it's just a lot of noise, and the bottom line is nothing has changed in my view or my talking points in the last few years. And my advice to your viewers is just to disregard the noise. We went from 500 to 50,000 in 5 years. Nothing goes up or down in a straight line. And usually they say it's always darkest before the dawn. And that might have been yesterday. So, we could get a $5,000 bounce in Bitcoin tomorrow, and it wouldn't surprise me. It also wouldn't surprise me if we test 40,000. That's what you have to deal with when you go into Bitcoin is volatility. And like I mentioned earlier, if you think that Bitcoin catches 1%, what is tied up in all of the other 8 asset classes over the next few years, you're looking at a $500,000 price.
Okay, on that note, that big positive hairy number note, thank you very much, Ronnie. That was Ronnie Moas of Standpoint Research advising you to ignore the noise and keep your eyes focused on that very big goal. All right, coming up, Kavita Gupta's new blockchain fund and the latest news on the regulatory front.
Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lynn.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitinn.
Hi, I'm Dorian Wayne.
I'm Nikolai Stay.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi.
You're watching.
And you're watching CoinDesk TV.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
If you've been following the blockchain story as long as I have, then you may be familiar with our next guest. Kavita Gupta previously led Consensus Ventures, working alongside founders and developers of the Ethereum blockchain. Now she has launched the Delta Blockchain Fund. It is oversubscribed for the first funding round at more than $30 million. It plans investments for a multi-chain world. Kavita joins us now.
Hi, hey, Kavita. Michael, so good to see you. Hey, guys.
Good to see you. Good to see you too. So, Kavita, your big thesis seems to be this multi-chain concept, right? What does that mean for how you prioritize your investments?
Yeah, so Michael, just to correct the first thing you said, we are actually oversubscribed for our main fund too. So we are done and investing very actively now with 15 companies. Going back to your multi-chain, I think when I started my journey into the space, it was initially Bitcoin and then it was all about Ethereum. But I feel like today in the world, we have so many chains out there and there should not be a monopoly for one. Even layer 2 are extremely helpful when you have like you want to do NFT, you want to do DeFi, you want to do options, you need to use a lower gas fee alternative. And that is why we invest in companies which are basically either helping liquidity move across different chains, smart contract security happening, the native contracts, and basically allowing the whole assets to move from one place to another without user ever realizing that there are like 5 tokens changed in the background.
Good morning, Kavita. So who put money in the fund? Who were your investors? What were they trying to get out of investing with you? What was their thesis?
I think it's a mixed bag. We have institutional investors. We have a lot of family offices across the globe. We were very strategic. When I started, I wanted to make sure that this fund is very global. So we had a lot of global, some of the top family offices across the world. A lot of investors who have invested in traditional space and really wanted to get an idea into the blockchain crypto space. Very well famous investors, they came into the space. And some amazing actors, musicians, and artists who really want to start getting into NFTs and also understand how the whole metaverse world is work. So our whole cap table, if I can say, like as a fund, we have really interesting mix of individual family offices, institutions, and that's what we are going. We have already launched our growth fund, and that's also very surprisingly mix of like a lot of big pension funds and a lot of traditional companies from emerging markets like India, Brazil, Argentina, multi-billion-dollar traditional companies, and their venture arms are coming into our fund. So it's been a very interesting ride for me as a first-time fundraiser to learn how people are thinking about the space.
Kavita, if I understand correctly, you are also looking at everything from DeFi to NFTs to metaverse. And it's particularly with metaverse, these are really early technologies, right? And a lot of these metaverse platforms are, to be frank, not really ready for prime time, right? They're still very, very early. The user experience isn't that good, if they're usable at all. So how, as an investor, does one separate the winners from the losers at such an early stage? Like, how do you know which of these are going to make it and which aren't when they're so early and you don't really have a lot of data on the user experience?
You asked me the toughest question, and that's the question when any of my investor ask, I'm like, try to avoid it, because the honest answer is you literally have to go with the gut feeling of the team and have the trust in them that even if they have to pivot, they will pivot, but they understand the space. They have some gaming experience, they have some user experience, they have some experience on blockchain and crypto on how their NFTs or their avatars going to move. But what I'm finding very fascinating in the metaverse space, there was a big news last week about the Swedish bank coming and saying that their whole banking experience is going to be on metaverse. One of our portfolio companies is actually Metaverse AI, is actually working with companies like Coca-Cola and NBA and a lot of those places to have fans giving an experience of how to play it, like LeBron James. So I feel like people are finding very different way of using metaverse, from shopping experience avatars to actually dropping your new fashion collection and wearing it to your game party, to banking experiences and customer experiences. So I will give it another 2 years to actually see something which you and I would use, but I have high hopes from the space.
Kavita, I'm hearing the knocking, and it sounds like those are investors who didn't get into the fund or something going on there. But just trying to get through. Come on. But you were at Consensus, and now you're doing multi-chain. So what are the implications of that? I mean, stepping back, what is that telling you? Your own personal journey. Getting back to Michael's question, your own personal journey. What is that telling us about this space in general and what's coming next?
First, let me apologize for the knocking. Apart from investing, it's also the construction next door. But I think Consensus did. I have to give them the credit. They did make Ethereum ecosystem when nobody else would do, right? And Ethereum ecosystem still today is one of the most pivotal blockchain ecosystem in the space. I think Ethereum V2 has completely taken scalability to the next solution. Layer 2 of Polygon, Starkware, Optimism on Ethereum are taking next level to what scalability, lower gas fee, and the future looks like. So we can't move away that Ethereum is still the biggest, like at least in my world, 90% of the space. But you cannot also avoid amazing other protocols like Solana and BSC and other chains which are coming, which are very pragmatic and practical for a lot of users. If I am creating, let's say, a DeFi product, I may not want to use a lot of gas fee, which is still on Ethereum, and I may not have that scalability on L2 yet, so I may decide to do BSC. It's also very regional specific. I continue to see so much of Terra in South Korea, so much of BSC in Asia, so much of now Solana is coming out with people building. But at the end of the day, the dollar value on those chains, the adoption, the number of users, the liquidity has nothing to match with Ethereum. So I do see a world where it's going to be very interchangeable. There will be more EVM, non-EVM compatible. Cosmos going to be in a bigger way, but not yet. But that is what we are investing as a fund over next 2 to 3 years to be part of that and be on top of the game, ahead of the game.
Kavita, I'm going to have to close by putting you on the spot a little bit here, and that is, what is your definition of Web3? We just had Marieke Flament from the Near Foundation giving her take. You got Jack Dorsey saying it's a whole bunch of hot air. It really is a buzzword, is it not? What does it mean? What does Web3 actually mean?
I love Michael. His last question is always, I'm like, oh shit, that happened. I actually still figuring out, Michael, to be very honest. If you do find the definition of Web 3.0, please come and tell me. I thought it was blockchain and crypto. What does Web 3.0 means? I mean, if it's mean a decentralized world, then I want all the people who are talking about this to put their product on decentralized database and identity, which I don't think anybody has done it so far. So if you don't have your building blocks on decentralized world, you can't call your top product as Web 3.0. So in an ideal world, I think Web 3.0 would be where every stack of your technology is on decentralization, which I don't think is practically even possible today. Like, pieces of it is possible. I'm a huge fan of RV, huge fan of Graph and all that stuff, but we don't have a single product which imbibes all of them together and create a Web 3.0. That's how I feel. Please don't troll me.
No, of course not. Never. No. All right. Well, thank you very much for that, Kavita, and for being a good sport. That was Kavita Gupta of the Delta Blockchain Fund. Time now to check in with Nick Day, Managing Editor of Global Policy and Regulation. Good morning, Nick.
Good morning. How's it going?
Good. So some big news yesterday. The CFTC, the Commodities Futures and Trading Commission, fining crypto betting service Polymarket $1.4 million for having unregistered swaps. What's going on? What's the implications of this?
Yeah, so this came out first enforcement action of the year for a federal U.S. regulator, but the CFTC claims that Polymarket offered unregistered binary contracts, basically. And in order to do so legally in the US, you have to be registered as a swap execution facility and have a designation as a designated contract market, neither of which Polymarket had. So Polymarket has now been asked to pay the fine and wind down some of its markets ahead of a deadline imposed by the CFTC and allow customers to recoup all of their funds. And this is all going to happen by January 14th. And by January 24th, the CFTC is going to take a look and see if Polymarket's in full compliance. And Polymarket itself, in a statement, said that they will have more information about the future of the company and its markets in the near future, I guess. But the broader implication here is the CFTC explicitly called out some of the DeFi elements of Polymarket, but also some of the centralized elements of this DeFi product. So, for example, noted that Polymarket users basically had to use the Polymarket website. They couldn't go onto another platform and access the market. So there was a hint of centralization there. And the CFTC also just, in the order itself, they took a look at, the actual technical aspects of how Polymarket operated, how long it's been operating, how people could how people could trade these contracts and make bets on who's going to win, and this really does feel like a kind of precursor for a lot of other companies in the space, right? A lot of enforcement actions, they're kind of pretty blatantly focused on a single company and what that company did, but this does feel like it's applicable to some of the other prediction markets for sure, and possibly even some of the other DeFi companies out there.
Nick, turning to a totally different topic for a moment. Recently, we learned that Mexico is going to be issuing a central bank digital currency by 2024. In your opinion, do you think Mexico is going to do this before the U.S. does?
If Mexico is actually committed to this, then probably, to be honest. My view on the U.S.'s central bank digital currency efforts is that it's looking at this as kind of like that's a kind of cool idea to look into, but it doesn't seem like the Federal Reserve is currently looking at a central bank digital currency as something it must have, or even something that it needs right now. And, we've heard about research projects going on since 2018, 2019, but at the moment, it does kind of feel like the CBDCs are just, a very cool idea, maybe, perhaps, possibly. So if Mexico's committed to this and it actually plans to launch one, then yeah, I think it's going to happen before the US.
So, Nick, do you think that this change in, getting back to the whole CFTC action, do you think that it's sort of a change in tone in general from the CFTC from what it was under the previous administration, or is it sort of in line with its view that it should have a bigger say in the crypto markets in general?
No, I think this is consistent with past CFTC actions, and even more so, a lot of the past CFTC actions have been kind of focused on crypto spot markets, but here, this is pretty clearly, looking at what appears to be a derivative product within the U.S. So I would argue this is even more in line with how the CFTC has operated over the last couple of years than, for example, some of its actions against Coinbase, as just one example. Mm-hmm. Obviously, the CFTC is looking to have a bigger role in regulating crypto spot markets, but that does feel different from yesterday's enforcement action.
Alrighty, well, thank you, Nick. That was Nick Day, Managing Editor of Global Policy and Regulation. And don't forget to sign up for Nick's State of Crypto newsletter on CoinDesk.com. Okay, that's it for First Mover. Thank you to my co-hosts, Lawrence Lewitinn, Managing Editor of Global Capital Markets, and Emily Parker, Managing Director of International Content. I'm Michael Casey, filling in for Christine Lee this week. Meantime, check out The Hash at 12 p.m. Eastern, followed by All About Bitcoin at 3 p.m. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast with Angie Lau to see what's happening in the Asia crypto markets. Bye for now.
Welcome to the Daily Forecast, January 4th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, despite state media expressing concerns over hype, China's love of NFTs shows no sign of abating, with CryptoPunk NFTs selling in Shanghai for over $800,000 US. We're going to take a look at that and a whole lot more coming up. Let's get you up to speed from Asia to the world. Well, let's kick off with some of the top stories coming out of Asia today. First up, South Korean internet giants Naver and Kakao's move into Singapore's blockchain space, well, it's kind of hit a stumbling block. That's because the Monetary Authority of Singapore, or MAS, says that their respective blockchain subsidiaries, LineTech Plus and Clayton, will not be exempt from complying with its Payment Services Act. Now that means the two companies will have to apply for licensing to provide digital token payment services under the MAS. And while around 170 companies have applied for these licenses, only 3 have been approved so far. While Singapore is seen as more crypto-friendly than other nations, seems like the two may need to readjust their blockchain muscle building plans for the moment. And over in China, according to local media, the southern provincial level region of Guangxi is researching cross-border finance, supply chain service platforms, and ECNY applications. Now, the move comes as the Regional Comprehensive Economic Partnership, or RCEP, the free trade agreement between China, 7 ASEAN countries, South Korea, Japan, Australia, and New Zealand, came into force on January 1st. Now, Guangxi is seen as a gateway for ASEAN trade, with the report saying the plan is designed to support cross-border circulation of capital. You can find those stories and a whole lot more at forecast.news. All right, staying in China, interest in NFTs shows no sign of letting up, with CryptoPunk number 8690 selling at a Shanghai auction house for a little over 5.2 million yuan, or around $820,000 US. Forecast News' Timmy Shen has more.
Shanghai Jiahe Auction told Forecast News that payment for the NFT was made in yuan terms. The sale, which formed part of an auction including more traditional artwork, is a signal that Chinese investors' interest in digital collectibles continues to grow, despite state media publicly criticizing NFT hype and speculation. And while NFTs are not included in China's stepped-up ban on cryptocurrency-related activities, tech giants including Alibaba and Tencent have since rebranded them as digital collectibles, following those concerns being raised. Ironically, the state-owned Xinhua News Agency also seems keen to ride the NFT wave, issuing its own digital collectibles. The collection released on December 24th featured 11 news photos from its archive, each limited to 10,000 copies. For Forecast News, I'm Timmy Shan in Taipei, Taiwan.
Happy 2022. To look forward, we got to look back a little bit. 2021 was a spectacular year for digital assets, a year where the crypto market cap grew almost 4 times from the start of the year to the end, but also a year of unprecedented volatility. But within that volatility, of course, there is opportunity, especially in the DeFi space. David Lighton, co-founder of Lithium Finance, the man with the DeFi download, joins us once again to explore just that. Happy 2022, David.
Happy 2022, Angie. It's great to see you. Thanks for having me.
We made it. Okay, so David, OG of the crypto world, we're talking about Bitcoin here. It had a great run in 2021. However, you can't ignore Ethereum, Polkadot, and so many others clearly outperformed. But the fall we saw in the last month or so has kind of rattled a lot of investors and people in the market. So how does one separate or spot the real value tokens among the thousands of altcoins that are on offer right now?
This was a big year for Bitcoin because inflation was ramping up. Overall confidence in governments around the world has continued to decline in the face of the pandemic. And we've seen a lot of mainstream names begin to consider Bitcoin as a credible investment, whether as an alternative to gold or just as an investment. To your point about Ethereum and others, I think if we look more deeply into the sector of blockchain crypto itself and less at the macro, we're seeing growing liquidity, a massive amount of developer activity. And I think what that is really all about is real world business applications that continue to incubate. And so we look closely at DeFi, lending, staking protocols. They're a leading use case. They've kind of exploded. But payments, oracles, any tokens that facilitate trading in real world assets, I think we should continue to look at as they are making progress on building the alternative financial system of the future. And I would just add, avoid meme coins.
If the bear market sentiment from the macro perspective gets stronger, which DeFi projects would you be watching out for and why?
You may have seen Chamath. He said that this will be the year that Visa and MasterCard are disrupted by DeFi, right? And so I don't think that's true. I think we're still deep in the build, but the particular class of DeFi projects that have high throughput and an established commercial use case, I would be looking very closely on those. That could be individual chains like Avalanche, Polkadot, almost anything that's EVM compatible and has traction. I'm less bullish on things that aren't EVM compatible because the developer integrations are very complex. What I would look at now is in particular projects that are creating more of an established bridge between the fintech kind of financial services ecosystem and DeFi. So anything that has applications to payments, lending, traditional financial services, those would be the DeFi projects that I would want to look very closely at in the bear market or in the bull market.
Which means 2022 is a year to watch. Always happy to watch out for the DeFi download with you, David. Thanks again. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm editor-in-chief Angie Lau. Until the next time.